Hello and welcome to BQ Prime. You're joining us on this special broadcast where we are bringing you an interview with Mr. Sanjay Agarwal, the MD and CEO of AU Small Finance Bank. Of course, this week has been the week of the bank. There has been a major announcement regarding an acquisition, well, technically a merger, an amalgamation with Fincare Small Finance Bank. But in all probabilities, AU Small Finance Bank being a much larger lender, this can be termed as an acquisition as well. Mr. Agarwal, welcome to this conversation. Is the acquisition a correct word to use or not?
No, I would say because let's not go to terminology, right? Let's see that what the structure is. So, Vishy, it is a merger which is voluntarily. It is a merger of two well-run, two well-governed, and two well-established banks. We have certain things which is complementary, and I'll let you know everything. Like we are more north-west bound; they're more southbound. They have around 15,000 employees. We have around 30,000 employees. They have certain skills, which we don't have, and which is important to note. Like they have a skill to build a very profitable microfinance business, which is not easy, right? And the team has very high vintage in the sense that I don't know whether you know Rajiv, who's the MD/CEO of Fincare Bank, is working with the institution for the last 10, 12 years. The other team too, which is the older promoter of Disha Microfinance, is still there. So high vintage, high knowledge, high on execution, high of understanding. And that is what we are looking for because AU also has brought themselves from that same characteristics, right? So I think it's an amalgamation of many things. So that is why I want to say that is more about merger than an acquisition. And we have also requested Rajiv to join us as a deputy CEO of a bank, right? And we have also requested the True North, their principal investor, to be on the board, right? So I think it is more about coming together for the purpose and with the complementary skills and the other things, and then look to build one of the most, I would say, sought after retail franchise for this country.
Right, fair enough. So, as part of the amalgamation scheme, you've announced a swap ratio where you said that 2,000 shares of Fincare would be swapped for about 579 shares of AU Small Finance Bank. Do you think that this value accurately captures the value in Fincare, but also is not too cumbersome for your shareholders?
Yeah. So as I already commented about our complementary advantage, and one more thing, which we all should know that our governance structure is same, right? It's a bank merger. It's not
Right.
a merger of any asset of MFI or NBFCs, right? So if you take bank merger, then you will know that it's a tax governance is same, tax principles are same, your supervisory framework is same. You work under one umbrella. It's a bank merger. The both team understand the principles of banking, right? And of course, so when you value, you see only value about how the price to book is of mine and price to book of them. But I think it's beyond that because we are not buying and we are not paying anything in cash. So we are saying them, please come together to build a more better and more bigger franchise and in that sense, take our shares as a in consideration. So it's an all stock deal, right? So I think in a all stock deal, Vishy, their investor also taking call on us, right? And taking confidence on AU is also a very important signal from their investors and from the Rajiv and their team that they believe in AU, right? So I think it's amalgamation of the trust also, right? So I think I would say that even in maths term, it's around 2.1, 2.2. Getting a bank which is south, which is high on their whole execution from so many years, it is one of the best deal which can happen.
Earlier, when you announced this deal, you held a press meeting where you said that the of the merged entity, microfinance or well, unsecured in general, would be about 11% of the portfolio, right? So that's what it works out to. Are you comfortable with that level, or would you consider bringing it down a little later down the line, maybe in a few years?
So again, let's again, this, as you asked me, the how is more complementary, right? You know that microfinance business is a high ROA business
Yeah,
with its own challenge around the volatility around earnings,
yeah,
because there would be a very good 3 years and there can be very bad 2 years.
correct.
So we as an organization has to come together, but the initial thought process is that let's even it out. Like Crystal says that the average cost of credit on a 10-year basis
Yeah,
is in the range of 2.5 to 3%, right? On a maximum side, right? So what we want to do as a bank is this: let's build a provisions, maybe which is around 2.5 3% every year, so that we
okay,
can even out any of the eventualities. We can smoothen the whole process of NPAs and all those things. So we are not looking to say that it will be a high ROA kind of 4 to 5% ROA business for us. We are looking for anything around maybe north of 3%. But idea is to more give the predictability to the earnings for next 10 years, right? That's one thing, right? And I just said in the maybe I may have got it wrong number, but it is around 7-8% microfinance business when we get merged. Any significant market share in our overall any significant share of microfinance in overall scheme of things will depend on how much we want to be in ROA, how much we are looking towards this business as the risk in it, right? So it's early to comment that how much it will grow, but I think I want to keep it around maybe around 10% for next 4 to 5 years, so that we can understand more and more on a merged entity and then take a call, right?
Do you think that your shareholders also see it that way? Because your shareholders are not used to you having a microfinance portfolio in your book.
So Vishy, I got very interesting message from one of my very large investors, and he said me that, Sanjay, any successful business is only being built when people also take the cognizance of the changed fact over the years, right?
Right.
So we see, the way the microfinance business would have been for last 15 years, that doesn't mean that it will remain like this for next 15
Correct.
years. I had a long-standing position that we don't want to be in microfinance business, but there was a reason behind it, that when I had the option to build more secured and with just similar kind of an ROA, why should I do microfinance
Correct.
business,
Exactly.
right?
Exactly. There's no reason
But
to.
as of
Yeah.
now, once we are getting more and more scale, and we have a very different platform, which is a bank platform, which is obligated to do inclusive banking.
Right.
Our existence is because of that obligation, right? So we can't go away because it's a risky asset, right? We need to understand that asset. We need to understand those markets, customers, cyclic nature, and need to build a robust risk management to really be there, right? So I think we have got matured in last 6 years. As a bank, we have done so many good things. So the people need to believe in us, that if we want to be taking some kind of risk around microfinance business, it has to be very calculated one. So I think my investor will get convinced as we move forward. There can be initial anxiety, there can be initial question, but that doesn't mean they don't want us to be in the business, right? We need to communicate with them. We need to tell them the rationale behind it. We need to tell them that how we really want to take out of any challenge around the earning forecast in years to come. So I think once we will communicate with them, once we'll start dialogues with them, I'm pretty sure that they will get convinced that this is one of the most important piece in every bank journey, right? And I'm very happy that that we got this franchise, which is so high on vintage, high on experience, have handled this business in a different tough times, and now when times are good, they are with us to build a very meaningful business out of that.
One last question that I wanted to ask you was with regard to the nature of FinCare's business. At 93% microfinance, it's largely a microfinance company. Now, microfinance by
No, it's
definition
not
is
83.
a
It's just 60%. We see just 60%.
so 93% of the customer base is that how we would read it?
Yes,
Okay,
yes.
okay, fair
It's
enough.
always like that
That's
because
fair.
it's small. Yeah.
That's fair. So 93% of the customer base is microfinance. Now, by RBI definition, that's essentially people who have a household income of less than 3 lakh. I'm curious to understand what the future of then this distribution network would be. Would you use this as a base to maybe tap other customers, or are these customers good enough for you to cross-sell some of your other loans that you may be already offering?
So we always had one principle that we want to be urban versus your Sudesh banking kind of customers. So I strongly believe that every customer has his own requirements, own needs. So we need to understand them first before we want to cross-sell anything. So there will be no push things, because we understand that microfinance customers are at a low end. We want to build more inclusion so that they become more empowered and become more, I would say, they can grow with us, right? So we want their income to grow beyond 3 lakhs and then become maybe a customer for our vehicle loans, or maybe an micro business loans, or maybe for the housing loans. But the important thing is this, that we have the product for them. But it is not about that we want to sell right now. It is about that we sell them when they are eligible for that, right?
All right.
But meanwhile, they can have insurance from us. They can use maybe a digital bank of us for their any service needs or advice. We can sell them some kind of I would say, we need to understand them better. But AU has the capability on a product range side to offer them.
Right. All right, Mr. Agarwal, thank you so much for joining us on this conversation. Pleasure talking to you, sir. Please do continue watching.